The relative merit of equity market fragmentation remains a contentious issue for both market participants and regulators. On the face of it, some level of fragmentation seems desirable because competition tends to reduce transactions cost for market participants, while encouraging technological innovation. At the same time, too much fragmentation may reduce liquidity, dispersing it across multiple venues. Recent years have seen new venues opening in markets around the world, with the benefits of fragmentation generally deemed to outweigh the costs. Although it has to be said that this is a hotly contested issue, in part because there is a lack of empirical evidence. One of the latest venues to open in an existing market is Chi-X 2, which launched into the heavily fragmented Canadian equities market on May 3, 2013. Despite the multiple trading venues available, the Maple merger of mid-2012 meant that Alpha, TSX and TMX Select were effectively controlled by the one group. The operators of Chi-X, already the biggest alternative venue in Canada, launched Chi-X 2 with the intention of attracting retail investors and small to mid-tier brokers. They aim to do so by explicitly rewarding liquidity takers as opposed to liquidity providers, as is the more typical case. With this taker-maker strategy, Chi-X 2 was hoping to gain market share. Using the market quality dashboard, we analysed the impact of Chi-X 2 on the Canadian market's efficiency pre and post its introduction. We begin our analysis by selecting the Local Venues tab and selecting the Chi-X 2 market. Initially, choosing a time period covering the first 12 months of Chi-X 2's operation, we also select the on-market volume share percentage measure. Immediately, you can see that after an initial adjustment period, by September 2013, the market share of Chi-X 2 has settled between 3 to 5% of the market. Unless this trading has been solely driven by new activity, the market share of Chi-X 2 must have come at the expense of other venues. As Chi-X 2 was positioned to primarily compete with TMX Select, who also offered a taker-maker option, and the smaller Omega, we can add in these two venues to the figure, also adjusting the time period to clearly show any impact that Chi-X 2's introduction may have had. Here we see where TMX Select and Omega were trading at 2 to 3% and 1.5 to 2% respectively. By the time Chi-X 2 had established itself, these two venues had each lost about 1% of their overall market share, a significant portion of relative trading on these venues. If we add in the other three major venues, TSX, Chi-X and Alpha, we see that unlike the smaller venues, these larger venues were largely unaffected by Chi-X 2. Chi-X 2's fee structure was designed to attract active liquidity takers, which acts as a negative incentive for liquidity providers who can pay a lower fee at other venues. Such a disincentive may result in low liquidity provision. To investigate this, we examine the metric percentage of the time at NBBO as a proxy. Here we see that the divisions have largely followed the same breakdown as with market share. Chi-X 2 has established itself in fourth position. Liquidity provision for Chi-X 2 would appear to be better than its main competitors. Interestingly, unlike the volume share metric, here it is the three largest venues that show immediate movement following Chi-X 2's appearance in the marketplace, with sustained increases for Alpha and Chi-X and a sustained decrease for the TSX. Changing to the percentage of NBBO dollar depth metric, which includes the value of depth at the NBBO, indicates that Chi-X 2's captured depth at the NBBO at the expense of all other Canadian markets. With its emphasis on attracting retail order flow, we may also expect the average size of trades on Chi-X 2 to be below those of other venues. Switching to that metric, we see that while the average size is well below that of the larger venues, it is comparable to the sizes on the TMX Select and Omega, although with far less volatility. Taken all together, these figures suggest that Chi-X 2 managed to attract fairly consistent and reliable trading in its 3 to 5% market share. Keeping in mind the additional fragmentation that Chi-X 2 has brought to the Canadian Equities Marketplace, we turn now to look at how market efficiency may have been impacted. In general, we would expect that the introduction of a new venue could either push transactions costs down through competition or divide liquidity, increasing search costs. To examine this, we can use the effective spread metric, first comparing Chi-X2 with only TMX Select and Omega, as these venues were most impacted by its introduction. Here we see that Omega exhibits far higher transactions cost than the other two venues. Removing this from the figure to examine TMX Select, we see no sustained significant movement in its spreads, despite a minor increase during the first few months of Chi-X2's operations. Changing to look at the spreads on the larger venues of TSX and Alpha, we see no overall sustained movement in their spreads. Although Alpha does exhibit some increase for the first few months of Chi-X2's trading, similar to TMX Select, by September they have returned to previous levels. This result suggests that the market needs some time to settle down, perhaps for routing tables to be fully updated. Finally, we select the price impact measure, using it as a proxy for price discovery in the market. Here we see that while the TSX remains unaffected, the TMX Select measure again shows a minor increase for the first few months of Chi-X2's operation before returning to its previous levels. Overall, with the market quality dashboard, we've been able to see that the introduction of Chi-X2 has resulted in a new taker-maker venue without significantly impacting the rest of the Canadian marketplace. Chi-X2's achievement of a relatively stable 3 to 5% of market share does not appear to have come at the expense of transactions costs and price discovery, which are the key metrics representing market efficiency. Although increasing fragmentation, this new taker-maker has not adversely impacted the efficiency of the Canadian market as a whole. To complete an analysis of the impact of the introduction of Chi-X2 on market quality, we would also need to look at its impact, if any, on market fairness. To do this, we need to look at its impact on measures of prohibited trading behaviours. For this purpose, we look at information leakage, a proxy for insider trading, and dislocation of the closing price, a proxy for market manipulation. The results show no perceptible change in either measure around the introduction of Chi-X2. Overall, therefore, it seems that the introduction of Chi-X2 has had no detrimental effects on the quality of the Canadian equities marketplace.